joining us in today's training. I truly, truly appreciate you taking the time out of your busy schedules because you know what? The game is on. I can hear my siblings screaming, but I don't know what's going on. So, with that being said, I'm excited for today's training. But before that, who am I? You're like, who is this crazy person? My name is Katrina Apodaca. I am the Living Benefit Sales Director for here in beautiful BC. So that means if you have any questions when it comes to disability insurance, critical illness, or maybe you have a client that is harder to insure. So maybe they have medical conditions, medical concerns that don't allow them to qualify for a fully underwritten product, whether that's life insurance or CI, let me know. We have alternatives. Now, today's topic, I was specifically asked to do this topic, is about IA's fully underwritten critical illness program. We're going to talk about the need for critical illness, who can you offer critical illness insurance to, and we're going to go through a couple illustrations at the end. Now, if you have any questions throughout today's presentation, please type them down below in the chat box, and I will try to answer them as we go. So let us get started, everyone. Now, I love starting every presentation with this slide because who are we? Well, we are a key player in the insurance industry. In fact, IA is one of the oldest and one of the largest insurance companies here in Canada. In fact, you have an exclusive WFG team working hard and making sure that we're providing you the tools, the training, but most of all, the support that you need in order to achieve your goals. So I put my contact information down below in the chat. But maybe you need to get a hold of someone on the life side, on the investments, or maybe you're growing your team in another province. Let me know. I'd be happy to assist you. Also, just as a reminder for CE credits, please put your first name, last name, agent code, and email down below in the chat. Thank you, everyone. Now, if we take a look here. If I could change my slide. There we go. So studies have shown that 60% of Canadians own life insurance. Okay, that 60% could be term, par, UL, but it goes to show that 60% of Canadians know the value of life insurance and that there is a need for it. Okay, because if you think about it, life insurance has been around for a long time. You have it, your parents have it, probably your grandparents have it, probably even your great grandparents have had it. Because back in the day, if you were to get diagnosed with cancer, stroke, heart attack, more likely you were to pass away and that life insurance policy would have paid out, right? But what do you think is the percentage of Canadians who own a critical illness policy? Any ideas?
I'm guessing maybe 20%.
20%. So Pam said 20%. Okay. Neerjeet had unmuted themselves. Let's see here. Any guesses? No one else? Just you?
Just 20 from me.
Just 20 from you. Okay. If you guys want to speak up, please. I'm trying to make this interactive for you guys. I get it. It's 8 o'clock. But if we take a look
Katrina,
here. Yes.
Katrina, my guess would be around, it's a single digit, about 7 to 9%.
Oh, have you attended my trainings before?
This is my first session. My name is
Harman. Oh, it's your first one.
Yeah.
Okay. You're actually correct, Harman. So only 8% of Canadians say that they have critical illness protection. Write that down. Only, yes, Parm. 8%. Wow. Only 8% of Canadians say that they have critical illness insurance. That is scary because that means more than half the Canadian population don't have critical illness insurance. So my question to everyone, not only those Canadians, but everyone, do you have the budget to protect yourself in the event of a critical illness? Do you have the funds to pay for medication, to pay for treatment, or to pay for a loved one to come take care of you? Right? Most likely not. So there's a huge market that you could offer critical illness protection to, but also take a look at yourself. Take a look at, do you have critical illness? And do your clients have critical illness protection? Right? Because therefore, not only we can get the proper protection for you and your clients, but also it's having the conversation, right? Because more and more Canadians are living in debt, right? It's 1 in 2 Canadians live paycheck to paycheck. And imagine being diagnosed with a serious critical illness. And now, how are you going to pay for not only your monthly bills, but how are you going to pay for your illness? How are you going to pay for treatment? Right? A third-party survey was done asking Canadians across Canada if they've ever been offered critical illness insurance to. Only 11%, meaning 89% of Canadians have not been offered CI. So like I said, there is a huge market that you could offer critical illness protection, but why wouldn't you get that extra protection for your clients? Because that is giving your clients a peace of mind. And what is the real risk of being diagnosed? Well, as you can see, Canadians have a 5% chance of passing away before the age 65 versus if they were to get diagnosed with a critical illness, it's 20%. So they have a 4 times more greater chance of being diagnosed with a critical illness. So what can IA offer to your clients? Well, we have coverage that works with every budget. It's flexible, it's comprehensive, but more importantly, it offers a solution to your clients so that they wouldn't have to worry financially. Because let's face it often requires clients having to leave their job in order to focus on getting better. So even though they're experiencing a loss of income, the bills, the loans, they still need to be paid, not to mention any additional cost that come along with a serious critical illness. So like I mentioned, medication, treatment, home support, childcare, that can add up to a couple hundreds or even thousands of dollars a month for your client, which could be a financial burden. So here, today's conversation is offering a solution for your clients, right? But also it can help your clients focus on recovering rather than the financial situation, because that is the last thing that your clients want to be thinking about. And if we take a look at some statistics here, especially I like to talk about the slide because in the last month, in the month of April, we just, Canada was celebrating Cancer Awareness Month. Okay. And if we take a look at cancer statistics here, it goes to show that cancer is the #1 cause of death in Canada. I hope you're all writing down these statistics because they're all relatable, right? 1 in 2 Canadians will develop cancer in their lifetime. In fact, 239,100 Canadians were diagnosed with cancer in 2023 alone. So in 1 year alone, that's how many Canadians were diagnosed with cancer. And out of those Canadians, 86,700 Canadians died from cancer. 1 in 4 Canadians will die from cancer, and the 5-year cancer survival period is about 64%. Every year, I have to update these slides, right, to make sure that we're talking about the latest statistics. So one thing I noticed, the past 3 years, the bubbles on the outside, those statistics never change. Those statistics still stay the same, but what changes every year is the number of Canadians being diagnosed with critical illness and the number of Canadians passing away from a cancer diagnosis. So it's our job not only to educate the Canadians across Canada, but also making sure that they have the proper protection that they need. And if we take a look at other statistics when it comes to other illnesses, it goes to show that 1 in 8 women are diagnosed with breast cancer. 1 in 7 men will be diagnosed with prostate cancer. 1 in 4 people will get a heart disease, and 1 in 20 will experience a stroke. So critical illness is a serious issue that no one can foresee, but through today's technology and advanced medical treatment, more and more people are surviving and living longer lives. And we take a look here, the survival rate. I just said cancer is the #1 cause of death in Canada, but those who do get diagnosed with cancer, 60% will survive. Those who experience a heart attack, 85% will survive. And those who experience a stroke, 80% will survive. So these numbers on my screen here goes to show that not only will they get diagnosed, but there is a more than 50% chance of surviving, right? But how has a diagnosis affected your client? Are they able to go back to work? Are they able to do the hobbies that they had prior to their diagnosis? Or do they need long-term care? Right? Do they need 24-hour care? Or better yet, maybe your client can't go back to work, but we don't know that until a diagnosis. So here at IA, what type of protection can your client get? Well, as you can see, we have the 25 coverage conditions, and this provides comprehensive for your coverage. Not only allows your clients to structure their policy, but it allows them to be covered for more illnesses. And I want to take a moment to say, familiarize yourself with what those 25 illnesses are. Why? is because when your client gets diagnosed with an illness, number one, you know that they're covered for that specific illness. You know what is the definition, but also, is there a waiting period? Is there a survival period? Because that's just important to know. And we also have the 4 illness conditions, which you can see highlighted on my screen here. And in the transition 4 illnesses, it covers the 4 most important illnesses. So cancer, stroke, heart attack, and last but not least, aortic surgery. So even with the 4 covered conditions, your client is still getting a very strong product, and it's a quick and affordable option for clients, especially if they're on a budget, right? But if we take a look at what can IA offer to your clients, we're all about options. Okay, so we have term options, so term 10, term 20, and term 25, which have the decreasing 50% option available to your clients. We have permanent plans, so term 75 and the term 100, which have the flexible return of premium rider, either 100% on the 15th year or 100% at age 65. We have quick pay options. So term 120-year quick pay or 10-year quick pay, which have the flexible return of premium rider, 100% after the 20th year. And in all of our plans and standalone policies, we have the return of premium upon death rider. Now, why is this rider important and what value does it give to your client? Well, if your client were to suddenly pass away, no claim was made, no benefit was paid out, whoever the named beneficiary is will get every single cent that was paid onto the policy tax-free because you added this rider for your client. And we'll go into more detail once we're on the illustration. Now, if your client is a juvenile, meaning they're 25 or below, not only are they covered for the 25 illnesses, they're also covered for the 5 juvenile conditions, meaning they're covered for 30 illnesses altogether. We have the Prevention Plus benefit included, and we'll go into more detail in the next slide here, as well as the second medical opinion program. Now, you want to keep in mind, though, when it comes to our critical illnesses, they're available as a rider on our life policy. So whether you have a term, par, or UL, you can add a critical illness rider to your client's policy, but we strongly recommend them choosing a standalone CI. Why is because the flexible return of premium rider and the return of premium upon death rider are only available on a standalone CI policy. Now, we have the Prevention Plus benefit in all of our critical illness policies, and not too many advisors know about this, okay? So it's an added benefit. It's an added feature for no additional cost. And what IA will do is IA will give 15% of your client's face amount up to $50,000 for early detection cancers or non-life-threatening critical illnesses. So if we take a look at what are the covered conditions on the Prevention Plus benefit, you have skin cancer, breast cancer, stage A prostate cancer, thyroid cancer, lymphocytic leukemia, intestinal cancer, and last but not least, coronary angioplasty. So these are additional illnesses that are not covered on the full the 25 illness conditions, but these are additional illnesses that your client can be covered for in the Prevention Plus benefit. So let's say you have a client that has a face amount of $100,000, okay? 6 months into the policy being issued, the client got diagnosed with skin cancer. So in that situation, IA will pay 15% of your client's face amount. So $15,000 is paid to the client, and we don't reduce the face amount at all. So later, if they were to get diagnosed with one of the 25 illnesses, they would still have access to their full $100,000. Maybe 2 years down the road, your client has really bad luck and they got diagnosed with thyroid cancer. So in that situation, IA will pay another 15% of your client's face amount. It's another $15,000 to the client. Overall, we pay $30,000 to this client. But guess what? Every time we pay out on the Prevention Plus benefit, we do not reduce the client's face amount at all. So this feature will pay up to 4 separate times. So once per illness per contract. Therefore, every time your client makes a claim, we'll give them 15% of their face amount, up to $50,000, okay? And every time we pay out, we don't reduce the client's face amount. So going back to my example here, if the client made 4 separate claims, essentially I would pay $15,000 each time. So a total of $60,000 is paid to the client. And later on, if they were to get diagnosed with one of the 25 illnesses, the client would still have access to their full $100,000. So this feature is allowing your clients to make more claims than one into their policy, but also be covered for more illnesses. We have MediGuide, and this video is going to go into more detail what MediGuide is all about.
Being diagnosed with a serious life-threatening disease is not on my list of things to do, but it could happen. My life could change in an instant and bring with it fear and uncertainty. And when that happens, I want access to the world's leading medical minds from anywhere across the globe. I want the best experts in the field to review my medical records to see if my diagnosis and treatment are the absolute best for me. Thankfully, I have access to a medical second opinion from MediGuide, the global leader in connecting people with world-leading medical centers for second opinions. If I get sick, with one call, MediGuide's case coordinator will carefully guide me through the second opinion process. I will have the choice of 3 carefully selected, world-leading medical centers to review my file. Once I select a hospital, my file will be reviewed by a multidisciplinary team of specialists at that location. All of this is done at no cost to me. Within 10 days of receipt of the medical records, the second opinion is completed, and I will have the information I need. I can then discuss my results with MediGuide and my doctor to decide if any adjustment to my treatment is needed. And if I or my doctor want to discuss the treatment plan with the specialist who provided the second opinion, that can be arranged too. In fact, a recent study by Harvard Medical showed that in 90% of their second opinion cases, the original treatment plan was altered. This is the comprehensive, personal approach that I deserve. I hope I never need it, but if I do, I have it. If you want to learn more about the second opinion process, please contact us on the details below.
So MediGuide is an added feature in all of our critical illness policies, but including Cancer Guard. And what it does is it allows your clients to get a second opinion. So oftentimes when your client gets diagnosed with an illness, they obviously want to get a second opinion, right? They want to make sure that the diagnosis is correct. But whenever you have to go see a doctor or a specialist, those things take time. And you can't get an appointment right away. It might take a few weeks to even a couple months, especially when it comes to a specialist. Those take forever. So what your client can do is call the number on my screen, number 1. Number 2, this service is free. Okay, so they call the number, they provide the information to MediGuide, and then a group of expert of doctors will review your client's file, right? Assess your client, and oftentimes when someone is diagnosed, usually that diagnosis is incorrect. So they will give the proper diagnosis to your client, number 1, but also a treatment plan. And the best part about this is that the client doesn't have to make a critical illness claim. They can just call the number on the screen. How awesome is that? Now, we have the increased benefit rider, and this is a rider that's available on our standalone CI. And what is the benefit of this? What does it do for your client? Well, with increased benefit rider, it allows your clients to automatically increase their face amount by 50% without having to go through medical underwriting. So as you can see, if your client started off with a face amount of $100,000, with increased benefit rider, it will automatically increase their face amount from $100,000 to $150,000 on the 5th year. And then on the 10th year, the client has a second opportunity to increase their face amount again by another 50%. So they go from $150,000 to $200,000 of protection. So that increase would be automatic. There's no medical underwriting, but because we are increasing the premiums on the policy, or increase the face amount on the policy, will also increase the premiums on the policy based on your client's age at that time. So oftentimes when I talk to advisors and they've handled the claim for the client, you'll hear that the client wished they got more, they got a higher face amount. Right? So this is allowing your clients to get the higher face amount without having to go through underwriting. Now, how easy is it to qualify for our critical illness? It's super easy, super simple. For the transition 4, your client just answers 8 questions on Evo. That's it. For the full 25 illnesses, it's that 8 questions plus the 10, boom, 18 questions altogether. If your client has a valid email address and a valid cell phone number, not only can you do the application online, but you could do the signature process online. And the benefit of doing this is it allows your clients to have the potential to be instantly approved. So meaning by the time you finish your appointment with your client, the client's policy was approved, and then your client's policy is ready to be delivered the next day. How amazing is that? We've eased the medical requirements, meaning if your client is between 15 to 40, they could apply to a face amount of 250,000 just with the declaration of insurability. If your client is between 41 to 50 years old, they can apply to $200,000 of coverage just with the declaration of insurability. And the maximum face amount your client can qualify for, whether it's an individual or a corporation for critical illness, is up to $3 million. Now, I always like to close my PowerPoints with a claim statistic because that is important. So as of 2023, in the 1 year alone, IA paid $872 million in claims. That 1 year alone. So that is life insurance, critical illness, and disability benefits. But if we break that down even further, $47 million in claims were made through critical illness. So that was just over 1,000 policies for critical illness. Now, if we take a look at the breakdown, as you can see, 43% of those policies were approved. So that we paid out the benefit to the client. 27% of those critical illness claims were denied. Why? It's because either the disease was not covered or the definition wasn't met. So it's really important that not only you talk about life insurance to your client and critical illness, but it's also important to offer disability benefits so that even if that illness was not covered, guess what? If your client had a disability benefit under that illness protection, it would have been covered, meaning your client would still have received some type of benefit with IA. And it shouldn't surprise you, the number one illness in claims made was cancer. So 60% of the claims being made was based on cancer, right? So hopefully after this first session here, it gave you a better insight about critical illness. It gave you a better insight, the need for critical illness, who you should offer it to, but also being more aware of it. Now we're going to switch screens here. We're going to go to our software Evo to demonstrate a couple illustrations. But before we do that, that is my contact information. If you have any questions, any concerns, or maybe you have a client that you need to put a policy together, contact me. Okay, that is my number. That is my email. Me, call me, text me, email me. I am here for you. Now, any questions so far? Or am I going too fast, Parm?
I think that was awesome. If anyone has questions, feel free to ask. You can just unmute yourself if you would like.
Exactly. I don't think
I just wanted to.
Yes.
Hi, this is Harman. I just wanted to know if you would be sharing this policy, presentation with us.
Yeah, I can send it to Parm or Juliana, and then they can send it to you. Cool.
Sounds good. Thank you.
Perfect. So I think we get started on the illustration.
Yep, let's get started. Awesome.
Okay, so it's gonna be a lot. So make sure you have you're writing down notes. So once we get into Evo, we're going to go to critical illness. And as you can see, we have a couple things happening here. So this first column is our transition 25 illnesses. Okay. Middle column, transition 4 illnesses. So maybe your client is looking to get protection, but maybe they're on a tight budget. You might want to consider that. At the very end here, we have this concept called the shared ownership concept. Okay. If your client is a business owner or a key person, they want to get critical illness, they want a unique way to set it up, we have this concept available to your clients. We can take that conversation offline. But I don't want to distract you, so we're going to just do a couple illustrations on our transition 25 illnesses. So the first one we're going to do is our permanent solution. Okay, so our term 75, right? So if we go to our term 75 here, it's pretty simple. All you want to do is answer line by line so that you don't miss any section. Okay, and you want to put in the client's information. So we're going to do this one, insured one. We're going to put client 1. And I'm trying to remember Juliana's last name. What's Juliana's last name? Or is it the first letter? I think it's an S.
You can write S. Just write S.
Yeah, that's what that was. I'm pretty sure it was an S. So we're going to do this illustration for Juliana. Okay. We're going to make her 30 years old. Female, non-smoker. And now we're going to build this policy. So first up we're going to do a permanent plan, right? Actually, you know what? Before we do a permanent plan, let's take a look at our term options here. Okay. So let's just do a simple term tag policy. because Juliana might be on a budget, is looking to get some type of protection, but she's not really sure where to start. So let's just offer her a simple term 10 policy for the 25 illnesses with a face amount of $100,000. We aren't adding anything to this policy. It's just simple term 10. And as you can see for Juliana, it's going to cost her, actually, we do no tobacco, $28.35. So very inexpensive. And what we're going to do is we're going to go to the results page, because this is going to give you a better insight. How much is this going to cost Juliana? And the first column you always want to take a look at is your total annual premium, right? And as you can see, the total annual premium for her is $340.20. But in this case, remember, this is a term 10. So it's meaning it's renewable and it's convertible. Meaning every 10 years, the policy is going to renew. And when it renews, the premiums are going to increase, and it's going to increase at the based on their age at the time of increase. So in 10 years, when Juliana is now 41 years old, right, you'll notice the premiums go from $340.20 to $572.40. And when it's time for the renewals, you as her advisor, so Par might be her advisor, says, you know what? Juliana, let's take a look. Can you still afford this? She might say, yes, I still can. So let's go ahead and renew it. And then in another 10 years, when she's now 51 years old, right, there's another increase. So she goes from $572, and now it goes to double. It's $1,100. And now at this point, Juliana might say, you know what? I can't afford that anymore, right? Even though she wants the protection, even though she wants the coverage, she can't afford it. So then what's going to happen? What's going to happen to this policy if she can't afford the policy anymore? Any ideas? Yes. Farm? Any ideas?
Is there a ROP?
No ROP, nothing. She's
Okay,
paid
then
into this
it's gone.
policy. It's gone. So how much has she paid into this policy? $10,251.36. So who gets this money is IA. That premium that she paid is gone. So it means she's no longer covered for critical illness, number one. Number two, she can no longer claim on critical illness. So down the road, if she were to get diagnosed with one of the 25 illnesses, well, guess what? She's not covered, and she's no longer paying for the premiums. So instead of having to, every 10 years renew the policy, and you can renew this policy up until age 75, but you'll notice a significant increase in the premiums. Why not convert the policy? So what that means is that, at the time of application for your client, you're able to get protection for them. And these premiums are the same as whether your client did a term 10 rider on a life policy, maybe on a UL, or a standalone term 10 critical illness policy. The premiums are exactly the same. There's nothing different. But the only difference is, instead of having to wait to renew the policy, why not convert it? Right? So I'm going to copy the scenario. We're going to change the protection. Instead of doing a term 10, we're going to convert it to a permanent plan. So your permanent plan is term 75, term 100, or term 100 quick pays. Right? So term 75, meaning the protection is up until age 75. We're keeping the same face amount. Now we're going to add 2 riders into this policy. The first one is a return of premium upon death rider. Why would you add this rider, and what value does it give to your client? Well, as you can see, the return of premium upon death is $4.23. And what this means is that, knock on wood, nothing happens to Juliana. But down the road, maybe she passed away. It doesn't have to be because of critical illness. Maybe she got into a car accident and she suddenly passed away. Well, whoever her beneficiary is, it could be a spouse, it could be a child of legal age, it could be her parent, a sister, whoever her beneficiary is going to get every single cent that was paid onto the policy tax-free, because you added this rider for $4.23. And when I say every single cent, it's not just the premiums for her critical illness, it's also including any rider. So every single cent. The second rider we're going to add is our flexible return of premium rider. And we have 2 options for this. 100% after 15 years, or 100% at age 65. And without even me selecting one over the other, we know the cheaper cost and premiums is 100% at age 65. So as you can see, That's an additional $24.48. But why do most clients choose 100% after the 15th year? And what value does it give? Well, if you take a look here, the flexible return of premium rider 100% after the 15 years is significantly more, right? It's $48.06. And you might be wondering, oh my God, Katrina, that's a lot for my client. I don't know if my client's going to want to pay for that. But what is the value of this rider? So if we take a look here, the total premiums for this policy is $118.44. So you should know the drill. Go to our results page, right, to get a better breakdown. And the first column you always take a look at is your total annual premium. And in this case, it's $1,421.28. And if we scroll down here, as you can see, the premiums never increase. It stays the same. That's what a permanent plan is. It's meaning the premiums are level. It never changes. And this protection, this coverage she has is up until age 100. Now, if we scroll all the way to the top and we take a look on the right-hand side, we see our return of premium upon death rider. And this starts accumulating at year 1. So at year 1, if the client were to pass away, the named beneficiary is going to get that amount already, and it's tax-free, okay? When it comes to our flexible return of premium rider, because we chose 100% at starting at 100% at age after the 15th year, it starts accumulating at year 5. So when Yuliana is 35 years old now, the policy's been enforced for 5 years. She starts accumulating her premiums at 15%. It's going to gradually grow up to 100% on the 15th year. So if we take a look at the 15th year of the policy being issued, she's now 45 years old. And at 45 years old, she's accumulated $21,319.20. And you'll notice the values on her flexible return of premium rider and her return of premium upon death are equal to one another, which means at this point, now that the policy's been enforced for 15 years, she can exercise her flexible return of premium riders, meaning she gets that $21,000 back to her tax-free. She can pocket that. But the moment you exercise the flexible return of premium rider, A, the policy is no longer enforced. The client is no longer covered for critical illness. And C, they no longer have to pay the premiums on her policy. But guess what? Every single cent that she paid onto this policy is paid back to her tax-free. Right? That is just one option here. Otherwise,
Katrina, so
yeah.
another thing I think I wanted to throw in there is this client would be able to cancel or exercise a return of premium anytime after 15 years as well, even before it, right?
If you exercise it before that 15-year mark, Farm, well, you can get the premiums here, but it's not 100% of the premiums paid. So if you take a look,
it'll be
here,
whatever is.
It's going to be whatever here. So here,
Perfect.
if your client doesn't pass away, right, and they exercise it, let's say on the 10th year, I mean, your client's paid $11,000 to this policy, but they're only going to get back $4,000. So they still can, but it's not 100%.
Still pretty good. I think on the 15th year, it's 100%. And after that, they get back whatever they put in, every dollar. Okay, perfect. That works out.
Now, I'm glad you pointed that out, Par, because it's really important to note that your client does have the option of that. Right?
Perfect.
But like, let's say, your client says, you know what, that flexible return of premium rider is too expensive on the 15th year. What if we chose 100% at age 65? But if you choose 100% at age 65, that means that your client has to wait for the policy to be enforced for much longer. It doesn't start accumulating premiums until age 55, meaning here, the policy has been enforced for already 25 years, and they only start getting the premiums at age 55. Then they can exercise that flexible return of premium at age 65. Right? So, I mean, that flexible return of premium rider 100% age 65 is cheaper, but that means they're just waiting much longer to accumulate the premiums. Sounds good?
Katrina, I have quick questions. Most of the time when I'm doing the policies, critical illness for my clients, they're asking about the critical illness benefit. Is it necessary to, if they get a diagnosis and get a claim payout, to spend those, let's say this example, 100,000 in Canada on the treatment, or they able to spend on a treatment somewhere else in another country if they've been diagnosed?
Yes. so they can use that money to get treatment from another country, right? But so if your client gets diagnosed with critical illness, majority of the time they'll have to come back to Canada to get diagnosed by a Canadian doctor, right? Once we pay out the benefit, the client can use that money for whatever. So if they want to go back to their home country, get a treatment from there, that is up to the client. That's not up to IA anymore. We already pay out the benefit. It's different from disability.
Awesome. I think this is great because everyone has a bank account. Everyone puts in $100 a month in their bank account, but that doesn't really give them a critical illness benefit.
That's right.
Whereas here, they can put that money in, and in 15 years, whatever they put in, they're going to have. And during that time, they have that critical illness coverage as well.
That's right. That's
Perfect.
huge, right?
Yeah.
So let's say, the client doesn't decide to use their flexible return of premium. Then guess what? They can, like, maybe Juliana has, I don't know, maybe she has a family history of heart attack and she's scared that maybe in the future she gets a heart attack. She wants protection. She can continue paying her premiums, so that $118.44 a month. And then at age 75, what happens is I is going to say, you know what? She's going to send, I's going to send a letter to Juliana saying, congratulations, you're one of the lucky ones. You never made a claim for CI. No benefit was paid for CI because you added the flexible return of premium rider, right? So that $48.06, you get every single cent that you paid onto the policy tax-free. And in this case, $63,957.60. So nearly $64,000, right? So if you're in front of your client and you're explaining to them, you can say by paying a monthly benefit or a monthly premium of $118.44, if you get diagnosed with one of the 25 illnesses, IA will pay your face amount, that $100,000, and you can use that money for whatever need. Maybe paying for a loved one to come take care of them, paying for treatment, paying for medication, or maybe because you're not working, you're not earning income, the bills still have to be paid, right? Your client can do whatever they want with that money because they have the flexibility to. Otherwise, if they don't get diagnosed, right, they were lucky, they get every single cent that was paid onto the policy back to their pocket. It's become a 4 savings plan. Right? Because oftentimes, like Parm said, maybe, you might have a bank account, but usually if you have money in your bank account, who actually sees it? Most of the time, people are going to spend their money. But here, it's like a bank account saving your money that you don't touch. And when you need it, it's there for you. Right? So it's a win-win conversation for your client. Now, we're going to do another illustration here. We're going to copy this scenario. And this is going to be one of our quick pay options. So this is a very popular option here at IA, especially when it comes to WFG clients. And it's our quick pay option. It's a term 100, 20-year quick pay. And quick pay means you're paying more upfront for the protection for shorter duration. Okay. Now we're going to add back our riders, our return of premium upon death for $6.21. And we're going to add back our second rider, our flexible return of premium rider, 100% at after the 20th year. So they only have one option. And in this case, $6.12. So how much is this going to cost your client? $150.12. And you might be saying, Katrina, that's a lot of money. And I do agree, right? Life's expensive. But what is the value of a quick pay, right? What is the benefit of paying more upfront for a shorter duration? You should know the drill. Go to your results page. Take a look at this. So if you take a look at the total annual premium, it's $1,801.44. And because your client is paying more upfront, they're only paying for 20 years. So the premiums are condensed to only 20 years, right? So after the 20th year, so after Juliana is now 50 years old, at age 51, she's no longer paying for the premiums. But guess what? She has this policy. She has the coverage up until age 100. So at any given point, if she were to get diagnosed with critical illness, she could make a claim and her benefit is going to be paid out to her, that $100,000. But guess what? She only paid for this policy for 20 years. Now, we're going to take a look on the right-hand side, and we're going to take a look at our 2 riders. So we have our return of premium upon death rider, and we know that starts accumulating at year 1. Then we have our flexible return of premium rider. And we know that this is the 5th year because it starts accumulating premiums at year 5, right? So let's say at year 6, as you can see, Juliana has accumulated $2,300 into this policy. Summer's around the corner. She's like, you know what? I've been working so hard this year. I need to take a break. I want to go on an early summer vacation. And let's say, she wants to go to Hawaii for the next 4 months. Right? She's like, you know what? Bye, guys. Harm, you're in charge. I'm going to just relax. Right? But before she goes on vacation, decides to change her banking information. She forgets to tell you as her advisor, and she forgets to tell IA. So what's going to happen is that IA is going to try to deduct the premiums from her bank account. Obviously, we can't because we don't have her new banking information. After 2 months, so after 60 days, when we still have not received any premiums from her bank account, what's going to happen to this policy is going to lapse. You never want a policy to lapse, but you certainly don't want a critical illness policy to lapse. Why? It's because there's a 90-day moratorium exclusion period rule. That is not an IA rule. This is an industry rule. And what that 90-day moratorium exclusion period rule means, within the first 90 days of the policy being issued, any signs, symptoms, testing that lead to a cancer diagnosis, the insurance company does not have to pay. Okay, so let's say you have a client and they go for their annual checkup, and it happens to fall within those first 90 days. Well, guess what? Let's say your client went to go see the family doctor and they say, oh, I'm having neck pain, right? There's a lump on my neck. And at that time, there was no diagnosis. But turns out 8 years down the road, the client got actually diagnosed with cancer because of that lump. So when your client makes a claim, we always look at their medical history, right? And we would take a look at their medical history. The client actually went to go see the doctor within those first 90 days. Guess what? That insurance company does not have to pay their policy. So that is not an IA rule. That is an industry rule. So anytime there's a critical illness policy, a cancer insurance policy, that 90-day moratorium exclusion period rule is valid, which means in this case, Juliana comes back from her vacation from Hawaii after 4 months, and she'll notice her policy had lapsed. And she's like, oh no, I see the value in this policy. I want my policy. What do I do? She's going to have to reinstate it. But a couple things here. When you reinstate a policy, and in this case, it's been in force for 6 years now, she's going to have to go through new medicals, right? Maybe now she's 6 years older. Maybe her health had deteriorated, meaning maybe she's no longer covered. She's eligible for CI because of her health. Or better yet, she was able to reinstate her policy, but guess what? That 90-day moratorium exclusion period rule starts all over again, right? And again, she's 6 years older. And she also has to pay back the premiums to this policy, right? But in this case scenario, when you have both riders, the return of premium upon death rider and the flexible return of premium death rider, instead of coming home to a lapsed policy, she comes home to an in-force policy. Why? Is because instead of canceling the policy, we're going to deduct her premiums from her flexible return of premium rider. So the values that she's accumulated here, so it's been 6 years, she's accumulated 2,300. We're going to deduct those premiums from her flexible return of premium rider. Meaning when she comes home to from her vacation, she comes home to an in-force policy, which is of huge value. She doesn't have to reinstate her policy. She doesn't have to go through new medicals. All she would have to do is pay back the premiums on her policy, number one, pay back a bit of the interest occurred on the policy, which is prime plus 1.25. And that is of huge value to the client, right? Because again, she didn't have to go reinstate her policy. She didn't have to start her 90-day moratorium exclusion period rule. And lastly, she didn't have to go through new medicals. And that is of huge value to the client. Now, once she reinstated her policy, how much has she paid into this? So if we take a look on her term 120-year quick pay, right, for 20 years, she paid more upfront for a shorter duration. How much has she paid into this policy, Farm?
I believe 36,000.
Correct. How much does she pay for her term 75?
Where is that?
Remember, we go back to our illustration here. We go back for her term 75 for that same face amount. She paid nearly $64,000. 64 almost. If we go back to her term 100, it's pretty much half, exactly. Right? So in this case scenario, the difference between our term 75 and our term 100 is almost $28,000. She could have used that money for something else, maybe invested in an IA par policy, an IA RRSP, or go on another vacation or buy a car, right? She could have definitely used that money for something else. So if the client had a little bit more room in the budget, right? They pay more upfront for their policy. They pay for a shorter duration, number one. They pay significantly less, so almost half, right? And guess what? This is a term 120-year quick pay, which means she has the coverage up until age 100, meaning when she turns 75, IA doesn't say you're no longer protected. No, she continues having the coverage up until age 100. And when it comes to illnesses, certain illnesses don't start showing up until much later than 75 years old. So in case if she were to get diagnosed with a critical illness, well, guess what? She can make a claim and her benefit, her face amount of $100,000 will be paid out. Now, before we finish this training, I want you to keep in mind when it comes to these riders, the increased benefit rider, the return of premium upon death, and the return of premium rider, flexible return of premium rider, are only available at the time of application, okay? At the time of conversion, so maybe your client had, they wanted to get critical illness, maybe they're on a budget, you added a term 10 critical illness policy to a UL, after a year, you did a annual review with the client, they had a little bit more room. When you convert the policy, you could add these riders. Otherwise, maybe, today you have a client who has an in-force critical illness policy. It's been already 11 months. And, now you're just seeing these riders for the first time. You're like, oh my gosh, I want to get this for my client. What do? At IA, when it comes to life insurance and when it comes to critical illness, we have a 13-month plan change rule, which means within the first 13 months of the policy being issued, the client can make any changes to their policy, but also they can add these riders into this policy, which means if they want, the policy's been enforced for 11 months, they can just pay back the premiums since day one, meaning they had the protection since day one. Otherwise, so at the time of application, at the time of conversion, or after the 13-month plan change rule, once all that is done, the client can no longer add these riders, right? So hopefully, I could go on and on because there's so much more information I could provide to you right now, but I know I'm going to overwhelm you. So we're going to have a part 2 for this. Okay. Now, hopefully my goal today was, number one, get you talking about critical illness, right? When everyone else is an expert of life insurance, talk about critical illness. It's adding another product to your toolkit, right? It's allow you to be able to protect more Canadian families because more and more people need it. But also, hopefully, it gives you an idea, okay, what are the options that your client has with your client? You don't have to start off with a permanent plan. Start off with a term plan. Add it onto that UL policy and later on convert it. But that's still giving the flexibility to your clients. Now, any questions? I think I saw one in the chat here. My regulated... Oh, no, we already answered that already. Yeah. So if you get diagnosed with any other country, you do have to come back to Canada, be looked and diagnosed by a Canadian doctor. And then once the benefit gets paid out, you can go wherever you want and get treatment wherever you want. Any other questions?
Hi, yes, me. Can I ask?
Yeah, absolutely.
Yeah, Joanna, go ahead.
Yeah. Oh, thank you. So the rider of the return of premium of debt, you said that applies no matter in what is the cause of death, but it's for all the terms of critical illness that I can add that rider, or just in the last two that you show us, that is the 75 and the 100.
So this the return of premium upon death rider is available. So these riders are only available on a standalone CI. Number one, good question, Joanne. Number two, the return of premium upon death rider is available for all of our term coverages. So term 10, term 20, term 75, term 100, and our quick pay. But the flexible return of premium riders, this rider is only available for a permanent plan. So it's either the term 75, the term 100, or the quick pay option. So if your client has a term 10 policy, you cannot add the flexible return of premium. Great question.
Thank you.
No problem. Any other question?
Yeah, question.
Yes, Bob?
Okay, what if the client is overseas and is extremely ill and cannot come to Canada to see a doctor? How does that go then?
So in that situation, of course, we're always flexible here at IA. We can, make an exception. When they are diagnosed by a doctor overseas, we're obviously going to have to hire a third-party company, right, to translate those documents to make sure and validate those documents that, because sometimes there's fraud happening, but to ensure that the client was diagnosed. And if that's the case, we've had instances where we still paid out the benefit. Does that answer your question,
Awesome.
Bob? Okay.
Yes, it does.
Beautiful.
Perfect. Anyone else? All right. I think, Katrina, we are pretty much good to go. Thank you so much for taking the time out and training us on the product as well. So thank you.
No problem. Well, thank you so much, everyone on this call. I know, again, you could have been doing something, but you chose to be here, chose to learn. If you do have any questions, please do not hesitate to reach out to me. Parm and Yolanda are busy, right? They're your leaders, but you know what? I'm here for you too. So if you ever need more information, we do have our weekly webinars. I've saved the chat for C credits. Other than that, take care, everyone. Have a wonderful night. Bye.
Amazing. All right, everyone, once again, remember 8% of people have this product. So let's get out there. Let's share. A lot of families need financial education, and that's the business we're in. So thank you, Katrina, once again. All right, everyone, enjoy your evening. Watch the Canucks game, and then we'll go from there. See you, everyone. Bye-bye.
Bye.
Thank you.
Bye, Alina. See you. Bye-bye. Awesome.